My friends, what's up? So, great news. A spokesman for China Securities Regulatory Commission just answered the reporters' questions about the VIE structure. And this is what they had to say. So basically, they did the following. They answered the following. So in terms of audit oversight cooperation, the CSRC, which is the China Securities Regulatory Commission, has recently conducted candid and constructive communications with the U.S. SEC to address issues in bilateral cooperation and has made positive progress on several important issues. So we believe that as long as regulators on both sides continue to conduct dialogues and negotiations in spirit of mutual respect and trust that deal with regulatory issues in a rational, pragmatic, and professional way, we will certainly be able to find a mutually acceptable path of cooperation. So the most important thing here that I see is the V structure, and this is what they're talking. This is what they said about the V structure. So recently, some overseas media reported that Chinese regulators will ban overseas listing companies with V structure and demand Chinese companies to delist from U.S. stock exchanges, which is completely misunderstanding and misinterpretation. So as far as we know, some domestic companies are actively communicating with domestic and foreign regulators to seek listing in the US market. So basically what they're saying here is that they will not ban the V structures, okay? And secondly, they're saying that in terms of audit oversight, there is very good cooperation with the SEC. Why is the V structure very important? So if there's no ban of V structure, there's no problem, because companies will just get, even if they're delisted, and for example, they don't comply with US, they will get transferred, not delisted, but transferred to the Hong Kong markets. True, there's less, liquidity there, but there's going to be, in any case, more liquidity on Hong Kong because more investors will invest in this, in the Hong Kong markets, because they can no longer list in the U.S. markets. So the worst case scenario, in case the V structure, and that's what we see here, that V structure should not be banned. And that entirely depends on China. And what they're saying here is that they will not ban V structure. All the shares will transfer, in the worst case scenario, will transfer to Hong Kong. And, the companies will just continue to operate with maybe a little less liquidity, but the Hong Kong platform will become bigger and bigger, and the market will become, in any case, bigger and bigger. The only problem I see here is US putting sanctions on brokers and banks who are willing to trade for US customers in the Hong Kong market. So the only risk I see right now is a US risk, geopolitical risk, not the Chinese political risk. So that's my take on this. Very good report from China Securities Regulatory Commission, which they issued like some hours ago, and it's really a good report. So I'm gonna put the link. Do check it out. And what they're saying here as well is that the series of policy measures that relevant Chinese regulatory authorities have introduced in the past months with respect to regulating the development of the platform economy are aimed at limiting. So basically they're saying, why did they do what they did in China? They're saying that they're aimed, so their policies are aimed at limiting monopoly, protecting SMEs, safeguarding data, personal information security, and preventing the disorderly expansion of capital. Regulators on the other parts of the world are always also taking various regulatory measures against such emerging issues and challenges with a view to promoting the sound and sustainable development of platform economy. Therefore, relevant policy initiatives of the Chinese government are not targeting at specific industries or private companies. Nor are they necessarily connected to overseas listing of the Chinese company. So basically what they're saying here, yes, and they're continuing. So we'll continue to steadfastly promote reform and opening up, stick to the principles of the two unwavering, strive to engage the stakeholders, including investors, companies, and peer regulators, and further enhance policy transparency and predictability. Okay, so that's I mean, that looks pretty good, guys. I think that the market should have some so this brings like a lot of clarification, and I think that we should have I think that we saw the bottoming on Friday. Maybe we'll have some inertia on Monday, Tuesday, but I think that with this report and a practical showcase, DD showcase, with not the delisting but the transfer via Hong Kong, and letting Hong Kong DD operate in Hong Kong, will promote the growth of other companies, be it in US if they comply, or in Hong Kong if for some reasons they don't comply in US. So pretty good news. Really pumped for Chinese stock, and this is my only my opinion. I'm a large hodler of Chinese stock, and I will be continuing to do so. See you, my friends. See you.